Hello traders, and welcome to another weekend's market forecast video. As you have seen over the last week, the market has been correcting as we have been expecting. This is, for example, we start always with the dollar index. We have expected this corrective structure to the upside before we will start turning lower. So hopefully everybody has been having a great weekend and ready for the new week of trading. So we're going to start off with the dollar index as we usually do. We have reached another Fibonacci extension area over here, which we have been expecting the market to give us a reaction. This was explained during the live sessions to the members. So if you want to join us, feel free to check up the link in the description so you can get full detailed analysis over the week and also get our trade recommendations, which we are doing amazing, and we are going to share with you very soon our 3-month, which is the quarterly performance results on the trade recommendations, which for many people this is profits that some people can generate if they can do that over 1 year's time. We generate that over 3 months, so you are going to see the results very soon as well. So let's see what we have here in the dollar index. First of all, we can still see some more consolidation Monday, Tuesday before we go to the downside. Alternatively, we might see something like this, another move higher and then a break to the downside. So either one of the cases, we are bearish in the dollar index and we are expecting a reaction to the downside to take place. Now, where we expect the market to go and what this should be coming next, you can learn those things if you become a member. We only provide the detailed analysis to the members because we have a service. So generally speaking, dollar index, we are still bearish. We have been bearish since the middle of April over here. So far the market has been moving as we have expected overall. Well, again, we have been still within this corrective bounce over here after this pullback. We had this move from the last days of April to the beginning of May. So the market so far, it is bouncing from this Fibonacci extension area, and we are expecting very soon a break to the downside. It remains to be seen whether this move is going to break below these lows or not, but this move should be taking place together with a move lower in the dollar index first before anything else takes place. For us, we don't like trading this pair at the moment. We would rather wait for a more clear structure and see for possible trade setups later down the line. And for us, this is not something that is clear, and because there are there are a couple of different variations, we can still see this move, another move up, and then something like this. So this is the reason why we do not like to trade something when it's in the middle of a cycle, right? It's in the middle with not a clear direction so far. For the euro dollar, we have reached another Fibonacci extension area over here with a reaction from this Fibonacci extension area over here, and most likely the market should turn up to the upside for one more push higher within this area at least, or alternatively, if the market doesn't manage to break the recent highs over here, it could still do something like this, bounce, make another move lower, and then go back up. So either one of the two cases, we are overall bullish for the euro dollar. And for our traders, we don't find value buying from here just for this move. We have been recommending members to buy the euro dollar from these levels over here and this entry over here. So we already forecasted more than 200 pips from this move over here. So now we take it easy and we wait for the market to see which of the two scenarios is going to do, because then we will be expecting a bigger move to come later down the line. So if you want to figure out what's coming up later for the euro dollar overall, again, feel free to check us with the link in the description and consider becoming a member. For the pound dollar, same idea. We are expecting the market to continue higher to reach this Fibonacci extension area up here before any reaction can take place. Now, similarly with the euro dollar, this one has also the possibilities of another move lower before this move up. So either one of the cases, the market should still give us a push to the upside first. Whether this one is going to be this big or smaller, we don't mind, because for us, we don't trade it at the moment. We have recommended and explained to our members, if you consider buying this pair, should be from here and from here. So the market has already moved by another 400 pips that we have expected, and now we take it easy on this one and we wait for better opportunities down the line. For the pound yen, after we have seen this drop to the downside, we have rebounded higher. We can expect some reaction to take place first, even if the market wants to continue higher, right? So this reaction will be coming first to at least this area before anything else takes place. So overall, the market is bullish in the bigger time frame. However, we don't really find a proper setup and proper entry for trading at the moment. So we will anticipate to see this reaction lower very soon before anything else takes place. EURUSD, we have been saying that the market should be falling from these levels all the way here. Right now we are doing another corrective bounce over here, and very soon the market will still move to the downside at least once more before any bigger, let's say, corrective bounce can take place. So far we are within the cycle from 5th of March over here, and we are trading to the downside with at least one more leg lower should be expected to finish a corrective cycle from here before a reaction. And also the market could be in a bigger corrective structure since a couple of months ago. So we cover the bigger time frame analysis on this pair in our daily live sessions and to our members, of course. So that's why if you are considering to know what's coming next and how to prepare yourself for trading the market efficiently, you should really look into it and become a member so you always know what to expect next and which instruments are good for trading and which ones to avoid. Now for gold we have expected this move to the upside after this Fibonacci extension area over here, which allowed buyers to buy again. So now we are getting into the stage of a pullback, and we can see that the market should start turning up from this week onwards to make another all-time highs over here. Alternatively, we might see a bounce like that for another reaction lower like that before we go up. This is another possibility. Maybe we hold these lows or marginal new lows, so this is also possible, but the most probable path at the moment is that we start the move from these levels. So we are going to turn up eventually and gradually, something we have seen over here and over here before this move to the upside to take place here. So overall, still bullish in gold overall, and we are not looking for any possible setups at the moment because the last one that the market provided us was this buy from here, and now we are just simply waiting and seeing where we can enter next, any next possible trades, because the market has already been trading from a cycle from February over here generally. So the market is getting into a stage of maturity very soon. So in these cases, we simply prefer to stay away for any new positions. The last one we recommended, it was from this area over here, and the market reacted about 100 and something points, dollars move from this area over here, which is more than 6% in magnitude. So for the moment, we are going to stay on the sidelines, but the general bias still remains to the upside for at minimum one more high in gold before we see any bigger consolidation coming next. Now for oil we have been expecting this decline from this Fibonacci extension area over here. We have reached another one over here. However, the price action at the moment, it still looks very weak and looks like the buyers are not yet in control. We can still expect some more bounces to take place. They are possible, but the market remains overall choppy and we do not like to look for any setups at the moment. But the overall bias, even if the market does something like this, we are expecting another break to the downside to take place next. So we are overall still bearish in oil since these levels over here. And we are not going to change our view because we can see much more bigger risks in oil coming up, and potentially we might break the lows from December 2023, but this remains to be seen. because first we need to clear below the 73 level over here. If we break to the downside from there, then the door is open for much more downside in oil. In Bitcoin, of course, we have been expecting the market to give us a reaction from this Fibonacci extension area over here in the beginning of May. We have broken to the upside and above this corrective channel over here. So we are only biased to the upside for Bitcoin for new all-time highs at the moment. So whether the market is going to make another high and another consolidation before higher, that remains to be seen. Or whether the market will decide to do a double correction before it starts the move higher. So either way, more upside in Bitcoin for new all-time highs should be taking place, and we are only biased to the upside. From the indices, the SPX, we have expected this move higher from this running flat structure over here. So now we are getting into a pullback stage, very small pullback. We are not really expecting anything big at the moment, and we can still see new all-time highs first before another possible correction down the line. Alternatively, the market might still do a double, something like that, and then turn to the upside. So either of these two cases, we are overall biased to the upside for the SPX for at least another new all-time high before we could possibly see another correction later down the line. For us, we are not really trading this one at the moment. We have been buying from these levels, so we are expecting for a better opportunity for another trade setup. So for the time being, a little bit more upside here before a possible next correction. If you want to figure out what could be coming next and which levels to be looking at, you can become a member again, so we can keep you updated Monday to Thursday with our premium live sessions, and at the same time you will receive our exclusive weekend's market overview video and report through the BMC page that we update to the members. And lastly, we conclude the session with the 3 Qs and the GDX from the ETFs. So here are the 3 Qs. We have expected this move to the upside from this running flat structure over here that we have explained previously. So right now the market is getting into a strength point in which it will see some signs of weakness soon. So overall, it will still see more upside before it ends the cycle from 19th of April. So for the time being, more upside should be taking place. Whether we are going to do another low like that before the bounce, that remains to be seen. However, we are also likely to see more upside from these levels with just a small pullback here and continuation higher. So for trading purposes, no new positions are worth taking at the moment for this pair, for this ETF, sorry. And we should expect very soon to see a bigger pullback before it will allow more buyers to get in. For the time being, more upside short term, but at the same time, not really worth for somebody that looks for new positions. The best buying opportunity were from these lows over here, which we have explained to our members once again. So for the time being, just staying on the sidelines on this one should be wise. And for the GDX, the gold miners ETF, still one more high is still possible within this cycle from 28th of February in this case. Whether we are going to do a double in the blue path here or we start the move higher from these levels, that remains to be seen. In all the cases, at least another move higher to 39.40 area should be seen before another consolidation can take place. So thank you so much for watching. If you are new here, please consider subscribing. Don't forget to leave us a like so you can help the YouTube algorithm to push out the video to more traders so we can help more traders out. And also leave us a comment if you have any questions or email us at support@roiforecast.com if you have any trading related questions about our service for our membership service. At the same time, please consider following us as well to our other social pages, including our Telegram channel and our Twitter page as well. So with that note, enjoy the rest of your weekend, and we'll see you for the next video, either with a midweek market update or an individual instrument video, or into the next weekend's market forecast. Until then, trade successfully and trade safe.